Welcome back. In the last session we have discussed about the issue of debentures for consideration other than cash. Usually the company may issue debentures at par or at discount or at premium, even if it is a case of a purchase consideration other than cash. And we have discussed some of the cases with regard to issue of debentures at par, at premium. So let us continue with the further theoretical application as well as the practical cases regarding the same topic. Previously we discussed the issue of debentures to vendor at par, at premium and at discount. Actually this question was given as an activity. Anyway, let us go through the concept. M Limited purchase assets of 8,40,000 and took over the liabilities of ₹80,000 at an agreed value of 7,20,000. So the agreed value is the purchase consideration. So first of all you need to find the value of the business. Value of the business is assets and liabilities. If you take the difference between the assets and liabilities of that particular business, you will get the value of the business. So 8,40,000 minus 80,000, you will get 7,60,000. So actually the value of the business was 7,60,000, but the concern M Limited paid only 7,20,000. So the difference is a positive value, and as per the table, there is a table regarding the difference between the purchase consideration and the value of the business. If you are getting a positive value, it will be considered as a capital reserve. So pass the entries accordingly. Anyway, let us pass the journal entries. First of all, you need to pass the entry for the purchase. Purchase entry will be sundry asset, account up to sundry liabilities, to capital reserve, to vendor company. Here it is a situation of capital reserve, that is why it is shown in the credit side, because capital reserve is a credit item. So it is shown in the credit side of the journal. Whereas goodwill is a debit item, it's an asset, so it is shown in the debit side of the journal. So sundry asset is 8,40,000, to liabilities is 80,000, to vendor company, that is the purchase consideration, 7,20,000. So if you take the difference, you will get 40,000. 8,40,000 minus 80,000 and 7,20,000, you will get 40,000. Or else you can go through the equation which we have discussed in the last session, where there is a format for finding out whether the resulting of a purchase of business leads to capital reserve or a goodwill. Go through that, being the purchase of assets and liabilities of vendor company. That is the entry for the purchase. Next, here you are issuing debentures instead of cash, so you need to pass the entry for the issue of debentures. And basically remember, go through the question wisely. What is the case, whether the debentures are issued at par or at premium or at discount? It is a case of discount because it is specifically mentioned that M Limited issue 11% debentures at 10% discount. So discount is a type of capital loss, so it should be debited, and the entry will be vendor company account debtor, discount on debentures account debtor to 11% debentures. And vendor company, here you will write the purchase consideration 7,20,000. And value of debentures, there is an equation for finding the value of debentures. Value of the asset divided by price of one debenture. Here the price of one debenture was 100 rupees. Even if it is not mentioned in the question, it will be assumed like that. So 100, and it was issued at a discount of 10%, so it will be 90, and the computation will be like this. See, 7,20,000 was the purchase consideration, divided by 90, you will get 8,000. Remember, you need to multiply it with 100. So 8,000 into 100, you will get 8 lakhs. So this is how you have to find the value of the debentures. Once you have the value of the debenture and the purchase consideration, it will be given in the question. Take the difference, then you will easily get whether it is, if it is a case of premium or a discount, whatever it is, taking the difference you will get the required amount. That comes under the what are the category. Here as per the category, it is a case of discount, so you have got the amount. So this is how you have to deal with purchase consideration situations. Not only purchase consideration with regard to fixed asset, purchase consideration where the company might issue debentures whenever the company is purchasing fixed assets or capital assets from outside party, or the company is purchasing the whole of the business from the outside party. So these are the typical cases that comes under the same topic. So let us go to the next one. Issue of debentures as collateral. Sometimes the debentures may be used as a collateral security, because the companies issue debentures as collateral security against loans taken from banks or other financial institutions, because it is a legal document, that is why. And whoever holding the debentures will have the right to get the principal amount as well as interest. So in that sense we can use this as a security. Collateral security is a secondary security in addition to the principal security. If the company makes default in the payment of loan and the principal security proves to be insufficient, the lender can realize the amount from the collateral security offered. Just like selling a mortgage asset. You might have heard the term mortgage, or in simple sense you go through the example of gold loan. You are providing your valuable gold as a security and get some financial assistance from whoever providing those credit facility. If you fail to pay the principal amount with interest, your collateral security, that is the gold, will be reimbursed by the company, or they will sell the gold and realize the amount for which the credit was offered to us. That is the procedure. So just like that, the debenture is used as a collateral security. So whenever there is a default in the repayment of loan and the principal security proves to be insufficient, the lender can realize the amount from the collateral security offered. On the repayment of loan, the collateral security is automatically realized or released. There are two methods of dealing with such debentures in the books of the accounts of the company. So in the simple sense, in the collateral security as well as mortgage security, there are slight differences between mortgage and collateral security. For example, if I had taken a loan from a financial institution on mortgage of my asset, let it be land, and apart from that I had also offered some debentures that was held by me to the banks as a collateral security. Collateral security means additional security. So at first I had offered my land as security. Apart from that, I had also offered the debentures held by me as collateral security. So whenever I fail to pay the principal amount or interest, automatically the financial institution or a bank, whoever who had lent money to me, they will realize the first one. First one means property which was offered as mortgage. Land was offered as mortgage. So they will sell the land and realize the amount that has to be collected from me. But sometimes, if for my bad luck, if the value of the land is very low and the financial institution or the bank, whoever who had lent money to me, they couldn't realize the amount offered or credit provided to me, in that case they will sell the land at first. After that, if there is any more money they want to realize from me, they will use the collateral security. And once I had repaid the principal amount or interest or whatever it is, whatever default I had made, the company will release the debentures. That is a concept, just like the concept of a taking loan from a gold loan company or a gold loan financial institution, whatever it is. So in the debenture situation also, you may come across questions where a debenture might have used as collateral security or it has been provided as collateral security. You may come across such questions, and definitely you need to deal with such questions by answering or passing necessary journal entry. But the thing is, there are two methods for dealing such situations. First method is a very simple method. According to this method, no entry is made in the books. only a note being appended to the loan account in the ledger. This fact is also referred to in the balance sheet on the liability side of the company below the item of loan. The meaning is, I have mentioned that debentures may be offered as collateral security, and whenever for example, let it be my case, we can take that case. If I failed to pay the interest amount, the bank will realize the collateral security, or they will use the collateral security to recoup the amount which I didn't pay. So, at the end of that theoretical concept, I have mentioned that whenever I repay that loan, they will release the collateral security. Release the collateral security means they will give back the debentures which was offered by me to the bank. They will give me back the debentures I had offered. So that is a concept. So in the net effect means, after all these activities, there will be not much of information in the accounting that has to be recorded. The thing is, first of all, the debentures may be offered to the bank. Then you will write an entry. When we repay the amount or whatever it is, interest or a principal amount, they will give me back the debentures which was offered. So you have to enter the journal entry, reverse entry of the first you had entry which you have passed. There is a certain entries will be there. We will discuss about that. I am explaining the logical concept behind that. So when you offer the debentures to the bank, you will pass an entry, and once you repay the loan, whatever it is, the company will give back the debentures. Then you will write a reverse entry for the first entry. So the net effect is there is nothing, nil effect. That is known as nil effect. So for showing a nil effect, why we have to write those entries? So that is the meaning of first method. First method means, according to this method, no entries need not have to be required in the books, but instead you have to give a note or a small explanation regarding what is the procedure regarding this. Means such and such debentures were offered as collateral security and it was collected back, like that. Such a note will be given, but no other journal entries are required if you are following first method. Instead, there is also another method that is known as second method. If you are following second method, you have to pass 2 entries. So under this method, the company decides to record the issue of debenture as collateral security, because there are only 2 activities. We are issuing debentures. After that, once we repay back the loan or the interest, the debentures are received back. So whenever the debentures are issued, the entry will be passed, and whenever the debentures are received by us, then another entry will be passed. That is a simple meaning. So in both cases, the entries will be passed. Since the net effect of those 2 entries doesn't have an effect on our accounting activities, in the first method it is considered as we need not have to pass the entry. But as per the second method, see, under this method, whenever we issue debentures to the bank or whoever it is, if they had provided us some loans, you will offer debentures. So the entry will be debenture suspense account debited to debentures. Here the value of the debentures will be shown here, and debenture suspend account is shown on the asset side of the balance sheet, while debenture account appears in the normal way on the liability side. Debenture suspense is an asset. When the loan is repaid and the debentures are released, the above entry is reversed so that the original entry get cancelled. We are going to cancel the first entry, because when we give the debentures to the bank, you will write the entry debenture suspense account debited to debentures. But after you repay the loan, the bank has to give back the debentures offered by us. So you have to pass the opposite entry of the first one. First entry means this one. So whenever you receive back the debentures, you need to pass the opposite entry. So it will be debenture account debited to debenture suspense. See, just the opposite of the first entry. So if you go through these 2 entries, you can see that the effect of computation or accounting, there will be not much of effect, because once you pass the first entry and after a certain period you will pass the second entry, the net effect is nil. So because of that reason only, in the first method you can either neglect those information, just give a footnote in the balance sheet, or otherwise if you are following the second method, if you want to write entries for that, then you go for the second method. So these are the two ways in which whenever the issue of debentures as collateral security happens. We will discuss a case, then you will get a clear idea regarding how these activities are done. First one, ABC Limited issued 1514% debentures of ₹100 each to its bankers. It may be a banker, or it may be a lender, or it may be a finance company, whatever it is, as collateral security for a loan 1,10,000. Show how these facts will be recorded in the company's balance sheet under two methods. So if you come across such a question, which method you will choose? Definitely I will choose only the first method, because we need not have to pass any entries. Only there is a small explanation. Explanation means a small narration will be given as a footnote in the balance sheet. I will definitely go with the first method. You can either go with first method or second method, whatever it is. In this question we will discuss both the methods. Anyway, as per the first method, the thing is, since there are no entries has to be passed, there will be no journal entry or a journal, means journal format, anything like that. You will just have to prepare the balance sheet of the company. I believe you all know how a balance sheet of the company is prepared. So let us go with that. First one, as per the first method, write down the balance sheet, books of ABC Limited balance sheet, asset, whatever the date is given. Since there is no date, let it be like that. Particulars, note number, amount. I hope you all know what is the meaning of note number. Anyway, first one, equities and liabilities. Under that, non-current liabilities. Under that, long-term borrowing. This is how you have to show the issue of debentures. And under long-term borrowings, there are different types. There will be the issue of debentures, there will be loans from the banks, there will be different types. So how you are going to identify what is the source of this 1,10,000? For that purpose only note number is used. So let us go to that. So there are no further information will be shown in this part, but as per the first method, even if there is no journal entries, you have to give a footnote regarding the issue of debenture as a collateral security. So it will be mentioned in the note. So note to accounts under this, particulars and amount. Here first one, long-term borrowings. Under long-term borrowings, bank loan, we have taken a bank loan, and for that bank loan only we are offering the debentures as security. So in the bracket it will be written, secured by issue of 1514% debentures of ₹100 each. In what form? As collateral security for the loan. So even the sentence is also given in the question. Just write down the same sentence given in the question, and the amount is shown. This much is enough if you are following the first method. Remember, if it is a case of issue of debenture as collateral security, first method, you have to pass only all these items. Instead, if you are going to pass, or you are going to deal this question using second method, here you have to pass the journal entries, and you have to pass or show the same detail in the balance sheet also. So in this question, the ABC Limited issued 1514% debentures of 100 each to its bankers as collateral security for a loan of 1,10,000. So the entry will be, whenever we issue debentures, the entry will be debenture suspense account debited to debentures. What was the loan amount? 1,10,000. But we had offered debentures worth ₹1,50,000. So you have to show the amount like that. See, this is how you have to deal with. Don't get confused. In here we are not going to pass any journal entries. First method, we didn't pass any journal entries, but we have given a footnote in the note to accounts where we have mentioned that against this 1,10,000 we had offered our 1,500 debentures of ₹100 each. But if you are following the second method, you have to pass the entries. But remember, in the entry, here you have to show the value of the debenture which you are offering, not the amount of the loan. amount of the loan is not a factor while passing the journal entry. It has to be considered only at the time of preparation of balance sheet. So 1,50,000 worth of debentures were offered as security. So debentures issued as collateral security for a loan, and once you pass the entry, again you have to show the same in the balance sheet. The rest of the procedure is almost similar to the first method also. Here equity and liability, non-current liability, long-term borrowings, one means note number. Here the working note will be shown. Now 1,10,000, that was a loan amount. Next one, note to accounts. Here there is a small computation adjustment. Here long-term borrowings is 1,10,000, and here the bank loan, we have offered 1,500 as debentures as collateral security against the loan. So 1,50,000 worth of loan means security was offered, and from that you need to deduct the debenture suspense. Why it is shown like that? Why debenture suspense is deducted here? Because if you go through the theoretical concept which we have discussed, see, debenture suspense account is shown on the asset side of the balance sheet, and the debenture account appears in the normal way on the liability side. So debenture account is, or debenture is used as collateral security against the loan, that is 1,50,000 worth of debentures. At the same time, debenture suspense account is also created because we have issued debenture as collateral security. So debenture suspense, a new item is formed and it is shown in the asset side. So instead of showing an item in the asset side, we can deduct the same from the liability item. See, debenture suspense is related to the debenture offered as a collateral security against the loan. So instead of writing the debenture suspense in the asset side, we can deduct it from the debenture which has been offered as collateral security against the loan. So 1,50,000 less debenture suspense 1,50,000, the net effect is the value of the loan, that is 1,10,000. So this is how you have to deal with issue of debenture as collateral security if you are following the second method. There is no rule regarding you have to deduct debenture suspense account. You can either show as a deducting it from the debentures in the liability side, or else you can show the same in the asset side. In that case, you need not have to less debenture suspense in the liability side. Simply write the debenture suspense 1,50,000 in the asset side. So this is how you have to follow. So go through these theoretical aspects, familiarize the case which we have discussed, try to follow the steps which we have discussed today. So let us go to the next area, that is redemption of debentures. We have discussed about the term redemption means repayment of debentures. Once, if I own a company, I had raised certain funds by issue of debentures, and after a certain period I have to repay back those debentures. That is the concept of debentures. So at the time of redemption, how we are going to deal with the redemption, as well as how you are going to write down the journal entries with regard to redemption of debentures. Even though it is very simple, but there are some common tricks and logical aspects which you have to keep in mind while passing the entry for the redemption of debentures. As I have mentioned earlier, whenever a company issues debentures, terms and conditions on which debentures will be redeemed at maturity is usually mentioned at the beginning. Redemption of debentures means repayment of the debentures. In other words, it is the discharge of the liability on account of the debentures. Debentures can either be redeemed at par, at premium, and at discount. So the main issue with regard to the passing journal entry happens to be in these three situations, that is at par, at discount, and at premium. So just think logically. We have collected certain sum of money by issuing debentures worth rupees 100, and after 5 years we are going to repay back. If you are repaying back 100 means there is no profit or no loss, because we have collected 100 from someone and we have repaid back rupees 100. There is not much of an issue. But the issue occurs, issue means loss or profit with regard to issue and redemption. There is that factor will happens whenever there is an issue and redemption at different values. So if I had collected or raised debentures for rupees 100, and if I have to repay at rupees premium, that means I have to pay more. So in that case it is not a no profit no loss situation. Definitely there will be a loss on redemption like that. So like that, whenever sometimes I have raised means funds by issue of debentures at discount, that is 90 rupees worth of discount debentures was issued, but at the time of redemption if I pay rupees 100 also I have to suffer loss. If I redeem the debentures at premium also I have to suffer loss. So the change in the value of debentures at the time of issue and redemption, it is of great importance while passing entries. You have to go through it very carefully, whether there is profit or loss with regard to issue and debentures. So whenever there is a means difference in the value of debentures at the time of issue and debenture, definitely there will be profit as well as loss. So whenever there is profit or loss with regard to issue and redemption, definitely you have to show the same in the journal entry. So next we are going to discuss the various situations in which the journal entries you have to pass whenever there is an issue and redemption of debentures, even if it is a case of par, that is same value, or if it is a case of different values. That different values means sometimes it may be issued at premium and offered at discount, or it may be issued at discount, redeemed at premium, or issued at discount, redeemed at par. So in all those situations except for par and par situation, par and par means issue par, redemption par, issued at par and redeemed at par, except these two cases, all other cases will have profit or loss for the concern. So issuing a debenture at a discount and redeeming at premium is of great loss for the concern. So in that case there will be a peculiar journal entry for that, and next we are going to discuss those cases in which how you are going to pass the entries with regard to issue and redemption. Until then, go through the theoretical and practical cases which we have discussed until now, and go through the cases of premium entries and discount entries, because some of those cases will have an advantage while discussing the issue and redemption of debenture situations. We will discuss in detail each of these cases in the coming sessions. Until then, go through it. If you have any queries, kindly do let me know.